Tesla did not jump today because Wall Street suddenly became bullish again. It jumped because the market may have finally realized it was getting too bearish on Tesla, and that is a very different story. Hey everyone, this is Ken. Today was a very interesting day for Tesla because TSLA moved sharply higher, and naturally, a lot of investors are now asking the same question. Is this finally the beginning of a real shift in sentiment, or is this just another temporary bounce? And in my view, that is exactly the right question, because the most important thing today is not just that Tesla stock went up, it is why it went up, what that move actually means, and how we should interpret it if we are looking at Tesla as long-term investors. So in this video, I want to break this down from 4 angles. First, what the UBS upgrade really means, because I think a lot of people are reading that headline too simply. Second, what Spring Update 2026 tells us about where Tesla is heading as a business. Third, why Europe's FSD rollout, including the quiz and tutorial requirement, matters more than it may look on the surface. And fourth, why the growing HW3 owner issue could become a real point of friction for Tesla going forward. So this is not just a stock move recap. This is really about the structural story underneath the move. Let's get into it. First, let's talk about the direct catalyst for today's rally. The immediate reason is pretty clear. UBS upgraded Tesla from sell to neutral. Now, at first glance, that sounds bullish. A lot of people will see that headline and think, okay, maybe Wall Street is finally turning positive again, but I do not think that is the best way to read it, because UBS did not upgrade Tesla to buy. They moved it from sell to neutral. And that distinction matters a lot. What they are really saying is not, Tesla is suddenly in great shape, go buy aggressively. What they are saying is, Tesla may no longer deserve such an aggressively bearish stance. That is a very different message. To me, this upgrade reflects something deeper about where Tesla sits right now in the market. For a while, sentiment got heavily skewed to the negative side. Weak EV demand, margin pressure from price cuts, uncertainty around delivery growth, and the feeling that Robotaxi, AI, and Optimus are still more future promise than present financial reality. All of that created a lot of selling pressure. But now it looks like at least some analysts are starting to say maybe that pessimism has gone too far. And when a stock rises because pessimism is being corrected, that is not the same as a stock rising because investors are suddenly convinced the growth story is already firing again. That difference is huge because rallies built on strong growth confidence tend to have more durability. Rallies built on sentiment repair can still be fragile. They can reverse quickly on the next earnings report, the next macro scare, or the next disappointment. So I would not look at today and say the Tesla story is fully repaired. But I also would not say this is just meaningless noise. What I think we are seeing is the market stepping away from extreme negativity and moving into a more balanced debate, and that alone is important. Now, the next question is, why now? Why did UBS make this move at this timing? And I think the answer comes down to the balance between near-term weakness and long-term optionality. In the short term, Tesla still has real challenges. EV demand is not as strong as it used to be. Pricing pressure is still part of the story. Robotaxi remains exciting, but meaningful revenue at scale still feels ahead of us, not here yet. UBS is not ignoring any of that. But on the other side of the equation, Tesla still has major long-term exposure to FSD, Robotaxi, AI, and eventually humanoid robotics. And after the stock pulled back, it became harder to argue that the market should assign almost no value to those future possibilities. That is what makes Tesla so difficult to price right now. If you look at Tesla mainly as an EV maker, some investors will still say it looks expensive. But if you increasingly view Tesla as an autonomy and AI platform, then the stock can start to look a lot more reasonable, maybe even cheap relative to the opportunity. And I think that is where the real debate is now. Tesla is no longer easy to analyze as just a car company, but it also has not fully proven its AI and autonomy economics in a way that satisfies the market today. That in-between phase is uncomfortable, but it is also where the opportunity is. And this is where Spring Update 2026 becomes very important, because in my view, this update was not just about making the product nicer, it was another signal that Tesla is trying to evolve from a company that sells cars into a company that builds an ongoing software and AI ecosystem around the car. There were several headline features that stood out: the self-driving app, Grok integration, the FSD stats screen, and broader safety improvements. If you look at each one separately, you might just say, okay, these are useful updates. But when you step back and look at them together, the picture becomes much clearer. Take the self-driving app first. To me, this is about framing FSD not just as a feature that comes with the vehicle, but as a service that users manage, engage with, and potentially keep paying for over time. That shift matters, because once something starts to feel like a service instead of a static feature, it becomes much easier to build recurring revenue around it. And recurring revenue is exactly the kind of thing investors reward more than one-time hardware sales. Then there is the FSD stats screen. This may look like a small feature, but I actually think it is very smart. Tesla is giving users a way to see in numbers how much driving FSD is doing. That helps transform the value of FSD from something abstract into something measurable. And when users can see results, they tend to value the product more, stick with it longer, and justify the cost more easily. That is how habits are built. That is how services become sticky. Then we have Grok integration, and on the surface, this can sound like just another AI convenience feature inside the cabin. But I think the bigger point is that Tesla is clearly trying to turn the car into an AI-enabled environment, not just a machine you drive, an environment that can talk with you, understand context, assist you, and become part of a much broader software experience. That matters strategically, because over time, competition may shift away from just battery specs, horsepower, or range, and toward intelligence, interface, ecosystem, and software quality. In other words, Tesla may be trying to widen the moat through digital experience, not just engineering specs. And that is part of why more analysts have started using the language of physical AI when talking about Tesla. It is still early, but the direction is becoming clearer. Now, let's move to Europe's FSD rollout, because this is where the story gets more grounded. We already talked before about FSD approvals in Europe, so today I want to focus less on the headline and more on what came after it. Specifically, the fact that users need to complete tutorials and pass a quiz. And I think this is actually a very meaningful detail, because it tells us regulators are allowing the rollout, but only within a very controlled framework. They do not want users to overestimate what FSD is. They want education, supervision, and clear responsibility. So yes, this is progress, real progress, but it is not the same as saying Europe is suddenly opening the door to frictionless, massive FSD monetization overnight. This is still supervised deployment, still cautious scaling, still a system where the driver remains responsible. And for investors, that means two things can be true at once. One, FSD is clearly moving forward in Europe, and that is bullish for the long-term thesis. 2. Revenue ramp from Europe is likely to be gradual, not explosive. Personally, I do not see that caution as a negative. In fact, I think it is probably the healthier path, because when a technology moves from theory into actual implementation, the messy details matter, regulation matters, user education matters, real-world behavior matters, and if Tesla can work through those details, that makes the long-term case stronger, not weaker. To me, the fact that we are now talking about tutorials and quizzes means FSD is no longer just an idea on a slide. It is entering the practical phase of adoption, and that is a very different phase. But this is also where the optimism runs into one of Tesla's more uncomfortable realities right now, and that is the HW3 issue. I think this is becoming one of the most important underappreciated risks in the Tesla story, because Tesla's greatest strength has always been its speed of innovation. The company moves fast, iterates fast, updates fast, but when that speed starts leaving existing customers behind, it creates friction. And that is exactly what seems to be happening with some HW3 owners. From their perspective, they paid for the future, they bought into the promise of FSD, and now they are watching newer hardware generations move ahead, while their own experience may not fully match what they expected. That is a real trust issue, and if that frustration grows, it does not just affect owner satisfaction, it affects Tesla's credibility when selling future promises to the next wave of buyers. That matters because Tesla's valuation has always depended, at least partly, on customers being willing to buy into a future that is not fully here yet. If those customers start wondering whether they will be left behind by the next hardware cycle, that changes the psychology. So for me, the HW3 issue is not just customer support drama, it is a real signal about the tension between fast innovation and long-term trust, and Tesla will need to manage that carefully. So, when we put all of this together, how should we read today's move? My take is pretty simple. Today's rally does matter. UBS stepping back from a sell rating matters. Spring Update 2026 matters. Europe FSD continuing to move into real deployment matters. These are all signs that Tesla still has meaningful future-facing momentum in software, autonomy, and AI. But at the same time, the challenges are still very real. EV headwinds are still there. Robotaxi monetization is still ahead, not here. And the HW3 issue shows that Tesla's execution path is not friction-free. So I do not see today as proof that Tesla is fully back. I see it as a sign that the market may be starting to reconsider whether it got too negative. That is different from full conviction, but it is still meaningful. And for long-term investors, that may actually be the more important signal, because Tesla is not a clean, easy story right now. It is not a simple momentum stock, and it is not a dead story either. It is a company going through a transition from EV maker to software, AI, and autonomy platform, while still dealing with the real-world complexity of that transition. That is why the stock is hard to price, and that is also why it remains one of the most important companies to watch. So my conclusion is this: today's move looks less like a full bullish reversal and more like the beginning of a more serious reevaluation. Not pure optimism, not pure fear, something in between. And in my view, that is exactly where Tesla is right now. For long-term investors, the goal is not to react to every green day or every downgrade headline. The goal is to understand whether Tesla is still building the foundations for a larger business model in autonomy, software, and physical AI. I think the answer is yes, but I also think the road there is going to be messy, and that is why this story is still worth following very closely. So let me know what you think. Was today's Tesla rally just a relief bounce, or are we seeing the first stage of a deeper re-rating? If you enjoyed this kind of long-term Tesla analysis, make sure to subscribe, and as always, thank you for watching. Let's keep enjoying life with Tesla and keep thinking about the future. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.